Hello and welcome back to episode 12. We will be learning how we actually put on the trades for the ascending triangle. Now, quick recap of what we learned in the previous episode. We have two things we're looking at. Number one, we need a straight line on top. That is our resistance line. That is the flat top that is referred to when we speak of the ascending triangle. And number two, we need an ascending trend line. So it looks like a pizza slice, like a ascending triangle, right? So where is your entry point going to be? The entry point is going to be the highest point of that formation. So where you've drawn your resistance line, you have a couple of swing highs. The highest swing high in that area is going to be your entry point. And your stop loss is going to be the latest swing low. So the highest point in that area, the swing high, is going to be your entry, and the latest swing low is going to be your stop loss. Remember, these patterns are a bit spiky. They fail sometimes, as all patterns do, but the ascending triangle is a very good indication for the continuation of the trend in the near term, not the long term, in the near term. So let's begin with a few examples I've got Yes Bank for you. So Yes Bank, this is an hourly chart in 2012. As you can see, I've drawn the ascending triangle. It's pretty easy to see. We were just reversing from a downtrend. So where's the entry going to be? The entry is your latest swing high, which is that point. And if you see, the opening bar is a huge green bar. So that is your entry point. So you've bought there, your stop loss is at the latest swing low, and we get a huge and nice up move over the next 1, 2, 3, 4 days. Not bad. The next example I have is of Yes Bank as well. You can see I've taken this example deliberately. Now, you will see that this is almost a perfect setup. You have swing highs right on your resistance line, the flat top, and you have a beautiful trend line moving upwards. You will see that on the 13th, that is this day, we did break down a bit, but that failed. This is called a failure pattern. We'll learn that a little later, but let's just follow our plan. Continuation pattern in an uptrend, looking for longs by the latest swing high. So this is going to be your entry. Again, the opening bar triggered it, and that is going to be your entry point. And we had a beautiful move over the next 2 days. As I always recommend, 2 times your risk or 2% return is a good place to exit. There is a lot more we can learn about exits, but we can discuss that in a separate video that I'll make very soon. The last example I have is of State Bank of India, or SBIN. As you can see, this is an uptrend. We have 1, 2, 3 resistance points. Those are swing highs. Your flat top and a beautiful trend line up. So buy the latest swing high over here, and your stop loss at the swing low, your latest swing low. You would have bought it. The next day we gapped up, and this is about 2.5 to 2.8% return in about 2 days, which is not bad at all. So now, I hope you can identify and trade the ascending triangle, the continuation pattern. We'll be continuing with another pattern in the next episode, but before that, do visit marketscientist.in. We have a lot of resources for the informed trader, for the new trader, and for investors as well. I hope I see you in the premium section very, very soon. See you in the next episode.